I'll show you how to buy first rental property in 7 steps and only 5% down. Hello everyone. Welcome back to the Buy Your Dream Home show. In this one, I'm gonna be so excited to show you again another explanation about the 7 baby steps, very simple steps, so that you can buy your first rental properties for only, by the way, 5% down. The main purpose of this is that I'm gonna show you my own experience when I buy my first rental property, and it's using the exact same concept, exact same baby steps for me to achieve my first rental property. Because as you know, a lot of people want to buy real estate investment properties. However, people always thinking, I don't have money, I don't have enough income to pay for a higher interest rate, right? So in this video, I'm going to show you an easy step so that you can answer those questions as well. With that, just let's dive right into the presentation for today. Okay, so let me share with you step number 1. Super very easy task is to save $1,000. Okay, save $1,000. Now, why is that saving $1,000 can help you buying a rental property, right? It's probably not. But it's mainly the reason why I put this step here is, by the way, because owning a house involves a lot of responsibility. Okay, and when you own a house, you have to be responsible for the maintenance of the house. You have to make sure that the house is maintained. For example, the AC filter has to be replaced for every 3 or 4 months. The water heater needs to be drained for every years. The roof needs to be looked at for every year. Things like that. It requires a lot of responsibility and requires a lot of uh, uh, mm, people who cannot committing to keep up the house well. Then why bother buying a house, right? Because it's your house, it's the biggest property that you could have for the entire life. So you better keep it and maintain it very well, right? So that's for 1,000. The reason why for 1,000 is that that's a start, right? Because if you cannot committing to save at least $1,000, then you're not going to be able to commit to anything. Just that put straightforward right there. 1,000 is a number that is small enough to start, right? But also to get easy to start, but also big enough for someone who doesn't have anything, and then that's gonna cause some engagement commitment from that person. So that's the reason why for $1,000. Okay. Now, by the way, if you do have any questions regarding to anything that I share with you in today, I know some of you might already see this video. Feel free to just send me a comment, put a comment in this video, and I'll answer it right away. Okay, great. The next step is after you save 1,000 in the saving account, right? Of course, you put it away. Don't use it. Don't touch it. It's gonna have the purpose later. The next step is to pay off the bad debt. Okay, and I want to focus on the bad debt versus good debt, right? Some people say all the debt is bad. However, though, in my opinion, those debt that makes money is a good debt, because it's a good problem to have, right? Because if you own money from someone, like let's say $1,000, but then you can buy something that make $10,000 for you, so that or 5,000 or even 2,000, right? It's still making money. So do you want to take that $1,000 from your friend all day long, right? Take that 1,000 and turn it to something else bigger, right? However, though, bad debt. The bad debt is, in my definition, is that something that causing losing the money from you. For example, is the same 1,000, right? But instead of making money, you spend them all, and then your friend also probably gonna charge some interest as well. So you end up paying, instead of only 1,000 for food, grocery, and things like that, with that 1,000, right? You have to pay back your friend 1,200. $1,300, $1,500. So that's extra money is more liability, and you have to give up more of your income to be able to pay off the rent back, right? So that is considered a bad debt in my system, in my experience, in my definition. And those are the things that you have to pay off. Okay, there's a couple of advantages of paying off your bad debt. Number one, talking about responsibility. Remember about the 1,000, right? You save up 1,000 for that reason because you want to create some momentum. Step number two is also create some momentum, but instead of putting into the saving account, you're gonna put into your negative number, right? Because the debt is a negative number, right? So instead of putting into the saving account, you're gonna put those money into the negative accounts, okay? The credit card, car loan, the student loan, those are considered bad debt, right? The second reason is that for the future, when you take on the mortgage, which is considered good debt, by the way, I'll explain that in another video. So when that time comes, the loan officer gonna look at the income to debt ratio, debt to income ratio, okay, debt to income ratio. So in that situation, the lower the debt you have, the better the income. The lower the debt you have, the better the ratio, okay, and therefore it's gonna be more chance for you to be able to take on the mortgage, okay, or even a bigger mortgage amount. All right, so paying the debt has that two reasons. All right, after you pay all the debt, all right, that is the time we're gonna go to next step is to save 5% down. Okay, you're gonna have to save at least 5% down. That's the whole purpose of this episode, this webinar, right? To help you buy a house with 5% down. Now, by all means, this is the minimum. Okay, if you are able to come up with more money, of course, use that, okay? Because while you can buy a house absolutely with only 5% or even lower, by the way, but while you can do that, should you, it's a different conversation, okay? So if you have a mean to come up with more down payment, like 10%, 20%, sometimes, in most of the case, those gonna be considered more benefit for you, by the way, okay? So say 5% down, that is the goal. Now, how do you know 5% is how much? So that's a very great question. Long, you keep saying 5%, but how much? Is it 10,000? Is it 20,000? 50,000? Who knows, right? Now, at that time, you're probably going to want to contact with an agent in the area so that you can tell them the area that you want to buy the property in, right? For example, it may be an area closer to your families, an area that close to your school, your kids' school, an area that close to your work, right? Tell them the area that you want to buy for, and kind of the ideal talk to them, brainstorming ideas to come up with the ideal property for you. Because if you haven't bought a property before, so you probably don't have all the information. For example, some of the important criteria the home buyers have is the number of bedrooms, the number of bathrooms, whether it's 1 story, 2 story, there's a pool or not, how big the house is, and how large the house is. So those are the very like the 6 common criteria of the house, right? However, though, depending on the conversation between you and the agent, you guys can come up with more and more criteria for the house. And based on those criteria, the agent can say, okay, based on that, based on the criteria, based on the experience, I'm gonna say that you have to have at least $500,000 to buy a house in this area. Right? In that situation, that's 25,000 for 5% down. Right? If the agent say, you're gonna only need $400,000 to buy the house, like you said, right? That's $20,000, right? So from that situation, you come up with a goal, right? You come up with a number that you're gonna shooting forward to, and then you're gonna come up with a plan to save for that 5% down. All right. Now that is step number 3. Obviously, you can see that 1, 2, and 3. There's nothing relating to the house yet, right? Because everything in step 1, 2, and 3 is just meant to prepare for the house. Okay, prepare for the next 4 steps to be able to get into your first house. Okay, but I'm sure it's gonna be worth it. Because in step one, you're talking about the mindset, right? You prepare the mindset. And by the way, everything starts with the mind. Okay? If you can, don't think about any other number, right? Right? Number two is to increase your chance to borrow, right? Increase your chance to have mortgage later on. And number three is the must. Okay, is the must, is a need for you to have to be able to buy the house, because you can buy a house with 100% leverage. I wouldn't recommend that to you, no, for like first time home buyers or first time investor. Okay, we talk about more of that advanced strategy in the different videos. But for today, the first three steps is very basic. That give you a good foundation, right? When you buy a house or when you build a house, you start with the foundation, right? Start with the foundation. When you have a good foundation, when you're ready after step three, okay, then let's go to number four, to go buy your primary home. Right, to go buy your primary home. Some of you might say, wait a minute, Long, you lied to me. You said that you not teach me how to buy my rental property. But this is the step number four, is actually buying the primary home. Yes, this is step number four, right? Out the seven. So we're not done yet. So, but just do this, okay? Because with 5%, if you go buy investment home at this step, you're gonna need at least 20% down. That is the requirements of the lender if you want to do investment home. Because when you go buy a house, you have to tell them, hey, what is the purpose of this house? Is it a primary home or is it an investment home? And then if you tell them, okay, I'm gonna buy this as an investment home, then they're gonna require you to have 20%. But if you buy it as a primary home, then they say, okay, how much down that you have? You're gonna say 5%. Now you can say, Long, why are you teaching me to lie? No, you're not lying yet, because you actually buying a primary home where you can actually move into. Okay, so you have to move into this house. That's why it's called a primary home. Some of you might say, no, I really like my rental. Forget about it. Forget about a rental, right? Just finish the contract with them, move into your primary home. But because think about it, okay? If you go rental, 100% of that money go to the landlord. Why would you do that? Why would you do that? Rather than that, go buy a primary home. You still have to pay mortgage, yes, and you still have to pay interest rate on that, yes. But a portion, at least a portion of it, even 1%, 2% of that monthly payment still go towards your primary home, your own property. That's still much better than going to the rental. Right? Because if you go to the rental, 100% of them, 100% of the money go away. It's just like you throw away the window $2,000 or $3,000 every month. Okay? All right. And now you buy a primary home, you still throw away $2,000 or $3,000, but at least you catch some of them back, right? You catch some of the cash back and then save it to your own. Right? So now, step number four, buy your first primary home. This is going to be a very an interesting step, right? Because in this step, you're going to learn about the buying process, right? Don't jump right into buying investment home, because you don't have any experience with buying a home even, right? So this step going to help you understand the buying process, understand the loan qualification process, understand how the regular buyers, how the regular tenants look at houses, right? If a tenant go looking for a rental to live in, their mindset is the same as a first-time home buyer looking for a house to buy, right? There's some in there different, but in general, the majority of the criteria is going to be the same, right? If a family of three people, they probably need at least 3 bedrooms, right? Right? So either if you go rent or either if you go buy a house, that criteria is the same, right? So you understand a lot of things that as a renter you don't know. Okay, as a person who never buy a house, you don't know, like the home buying process, the loan qualification process, and how to look at houses as a tenant, right? So you understand all of that. On top of that, okay, keep in mind, okay, this one It's just a temporary home. Okay. Step number 4 is just a temporary home. You're gonna move into that property. Okay. You're gonna move in to that property in or that you bought in number 4. Then in step number 5, you're gonna share a room or share a portion. Some of the house have a casita attached. Okay. Or some of the next chain product in Lenore community, then you can share the whole section of the house to the other person, right? Of course, some of you might concern about security and security reason and not comfortable with sharing the land. Sure, don't do this. Skip step 5. Okay, step 5 is just a meant to it helps in some situation for you to experience with the landlord and tenant relationship, finding the tenant, screening the tenant, right? Make sure it is a good person. Excuse me. Make sure that they have good income, right? Those experience that you can gain. Okay. Of course, if you feel not comfortable with sharing the same property with them, then don't do this. Of course, try to learn those experience in some way. Okay. Of course, you're not going to be able to get the last benefit of sharing a room is to have additional income to help you pay off your mortgage, right? So that is the reason why number 5 is important, because it gives you some experience. Additionally, it helps you with financially as well. Okay. So step number 5, 4, 5 is very interesting, right? Because you haven't done this before, especially 4. Enjoy it as much as possible. Choose the best house for you, okay? With the mindset of sharing a room in step number 5 to give you additional income, to give you additional financial resource, and to give you more experience with the landlord and the landlord and the tenant relationship. Okay, for what? Watch this. Step number 6 is the magic. Okay, while you're doing step number 5, okay, sharing a room, having additional income, of course you're gonna save up more cash as well with your full-time job, right? Until a time, it could be a year or 2, right? Now, of course, this could be a year or 2 when the value of the home, the primary home, keeps increase and increase. You now have something called equity. Okay, equity is the difference between the home value versus the debt that you still own, right? So that's the difference right there. Then what you can do is you refinance and get the portion of the equity out to use it as a down payment for the next house. Okay, so that's basically, it is not free money, right? But it's really difficult to find that big gap if you go to work, right? If you just go to the full-time job, you probably take a longer time to come up with the next down payment. Okay, but as the real estate increase in value, you can do a refinance and get the cash, additional cash from that equity on top of the saving money towards the next house, which is step number 7. All right, so this is where you can I said buy second house right here. Okay, it could be either another primary home, okay, and then move into that property, convert the first house, become your first rental property, hence which the purpose of today's webinar, right? Convert the first house into the first rental property. Or you can choose to buy a second house if you become like falling in love with the first house, right? Then just prepare 20% with that extra equity, right? And then go buy the next investment property. It's very flexible for now, right? Either way, you have one rental property for just 5% down in using this 7 simple baby steps. All right, everyone. And this is exactly the way that I do for my first rental property. At first, I bought a house in Glendale, Arizona, right? Only 5% down, right? I live in that for about 3-4 years, okay? 3-4 years, the home value increased. Get the refinance, do the refinance, get the cash out, use that cash use that as cash toward my rental property in Europe. Okay, now that is a way. Okay, to you just repeat the whole process. Let's say in the future my Gilbert property or my Glendale property increase in value again, I can get the cash out, combine them, go buy the next property. Okay, so that is the process, but you have to make sure, remember about the foundation concept that I have. Like in 1, 2, and 3, you already have that foundation very strong, right? For the top part, maybe 4 and 5 is the frame of the house, right? Or the roof of the house, right? 6 and 7 is just the decoration inside the house. You can just repeat the whole decoration. You don't have to rebuild the foundation. You don't have to rebuild the frame, the roof, right? You can change the decoration inside. Like you can leverage the equity growth of your properties to buy another properties easily after that. Okay. Well, thank you so much, everyone, for watching. My name is Longley. I am a real estate agent and also investors in the Phoenix, Chandler, Mesa area. So if you do have any question, feel free to send me a comment or an email. I'm more than happy to answer to you. Okay. Don't mind about this. This is an incorrect. I gotta tell my editor to remove this later. But thank you again for watching, and hopefully you have some good information right there. The next show is gonna be on the last week of October, which is on the 27th. So I'll see you again. In the meantime, feel free to contact me with any question that you might have. Thank you. Bye bye.